Welcome to this week's Halftime Talk, our weekly feature interview show where we sit down for half an hour with newsmakers and take a deeper dive in the global trends impacting the energy markets. And this week we're honored to be joined by Joseph McMonigle, the Secretary General of the International Energy Forum, recently appointed. Joe, welcome to the show.
Thanks. Great to be here with you.
Joe, we're coming together at this table literally 6 months into an unprecedented global pandemic, the great disruption to everything, and energy not excluded. We saw the most dramatic of demand collapses in the second quarter, and then the incredible effort to correct supply to meet the new demand cycle. But 6 months in to this great disruption in the context of what it means for energy, what would you identify as some of the top takeaways that you sit here now, 1st of September, think about?
Yeah, so I think it may be actually even too early to tell what the takeaways are. I think the only certain takeaway is that this pandemic has created a lot of uncertainty that I think sort of continues in the market today. But of course, there's been huge impacts on the energy markets and the energy sector in general. And so against that backdrop, what I would say is, I think, number one, I think we've seen a strengthening of the producer-consumer dialogue and cooperation, really unprecedented action, I think, taken by the G20 in concert with OPEC's unprecedented action in April. And I think, it should not go without saying, I think we're fortunate by the circumstance, really, that Saudi Arabia is the chair or the president of the G20 and was able, to really be in this position, I think, to
quite fortunate timing in a way.
Yes, yeah, very much so, in a very unfortunate circumstance. But they, really demonstrated leadership, and the G20, I think, is still actually, very much involved in that the energy part of this picture. So. And I think really the impacts are just going to be ongoing. And so I really think we're fortunate that this has been strengthened, but really, there really should not be, in going forward, any social distancing between the producer and consumer dialogue. I think it's going to be critical to the recovery of the sector and really of the global economy. So I think that's a really good sign that, the way they've jumped into action here and taken
quite effective. It's kind of an interesting thesis that you have. I mean, this 6-month period started with what could have been the Great Divide, right?
Yeah.
The major oil producers found themselves in conflicting positions about the way forward. And yet, of course, managed to pull it together spectacularly with the greatest supply cut in the history of the industry in order to stabilize everything. But it was a kind of individual players versus multilateral solution, if you like. Where do you see those two things? Because you still have the sort of 10,000-pound gorillas in the room, right? Saudi, Russia, the US, and then you have the multilateral agencies and the multilateral approach. Do those two come together still? Do they have a way of being harmonious, or is it still the big players dominating?
Well, I mean, the IEF sort of plays this role, of bringing producers and consumers together on a platform. It was founded under, this idea that, the IEA, which was the OECD countries, and OPEC, after the oil embargo, really needed to have a regular forum for discussions. The IEF has now expanded greatly to include other, countries, more countries combined in those two groups, and includes non-affiliated countries like India and China and Russia, and South Africa. So the IEF, I think, is a good platform, I think, moving forward to kind of take and steer this cooperation, and we look forward to doing that. But I do think the existing structures that are in place, I mean, as demonstrated by the action they took, I think very quickly. If you look at OPEC's action in particular, I mean, they really turned on a dime, to quickly address the situation, especially after
which was interesting because it sort of became, I mean, in the idea that the US is a major producer now, but also a major consumer, the biggest, or along with China, the biggest consumer, and that previously it would have been in conflict, the idea that you would work together to elevate oil prices and stabilize an industry would be slightly contrarian to the economic interests of a lot of consumers, but particularly the US. But on this occasion, it seemed it was of such a scale that it was in everybody's interest to stabilize, consumer and producer.
Yeah, that's right. I mean, you pointed out the obvious thing, which, while it is obvious, a lot of people overlook this, the fact that the US is really, a big producer and consumer. And, when I started my career in energy at the US Department of Energy in the early 2000s, we were constantly communicating to OPEC about, keeping production up to keep prices low, a little bit of tin cup diplomacy, if you will. Where now, because of the growth of the energy sector and how dependent the US economy is on the sector for growth and job creation, it's, prices are now, higher prices are actually good for the US economy. I think the interesting part about this is that the President Trump has really transitioned, I think, in his view, over the last 2 years, I think, in particular. But as you recall, he was a very anti-OPEC critic, and I think has really turned into understanding more the role that higher prices means to the U.S. Producers and also to sort of global energy market stability. So he may still always be an OPEC critic, but I think he appreciates now more the interdependence of the U.S. And it's a lot of this points back to the book that he wrote, a couple decades ago. And of course, the situation has changed dramatically in the U.S.
I think
since
that is probably, for me, and I think as you're articulating, one of the biggest takeaways of this 6 month, at least so far. There may be many more still to play out, but is the idea that having the global energy industry in a completely distorted state is in nobody's interest, right? And so the alignment to bring it back into some kind of harmonious balance serves the global economy, consumer and producer. I think the big challenge now, however, is, at least for hydrocarbon producers, is also to find balance within the context of the great energy transition, and that all of those alignments are together rather than slightly distorted. But it's kind of the big takeaway, that alignment and multilateral cooperation around the energy system is critical.
Yeah, I mean, I think the other big, looking for some takeaways, I think the other big takeaway that I'm focused on in particular, that's no secret to people who look at the market, is kind of this concern about an investment crisis. And, obviously, early on into early summer, and even still now, we're seeing companies announcing these CapEx cuts. And, I think we'll see in 2020 in general energy investment down, somewhere around 20%. And then, the oil and upstream investment in oil upstream is about 35%, and even renewables investment will be down, about 10%. And this could have real big implications, in terms of a supply deficit in the not too distant future if it's not addressed. And I'm confident that, OPEC and others will start talking about this because it is a big concern. On the other hand, you have to understand, obviously, where CEOs of major energy companies and their boards come down on this. I mean,
I suppose it'll depend. It's all about timing, where demand recovery goes. I mean, we've talked about the first 6 months of this sort of shock, hard crash recovery. It's still playing out, but does demand recover at what pace in order to, again, the consequence of that CapEx cut becomes significant or not? The equity markets would indicate that, we're in some kind of sharp V-shaped recovery, but the Main Street economy still looks like demand is sluggish.
Yeah, I would agree with that. I mean, I think after the initial sort of spike in demand that's basically been driven by gasoline demand, we've kind of hit a plateau in terms of demand. And actually, instead of a plateau, I think we may be even in a more a risk exposure environment in terms of demand, because I think there were sort of expectations that international travel might have come back in the summer. And obviously that didn't happen. And as we were talking, before joining the show today, there's a big uncertainty on all of that. But that's just one part of the demand picture. And so I think you're right. I mean, I think the demand is a huge question mark, overshadowing the market. And
inshallah, as they say, we get that recovery, and then the CapEx cuts become a big issue, and they probably will anyway. When you cut CapEx by this scale, eventually 3-4 years out, there's a squeeze. One of the things that have come with this period is that the energy segment of the S&P 500 has dipped to just 2.3% of the S&P 500. First time ever that energy was the smallest sector in the S&P. I'm wondering, what does this consistent decline tell you about the future direction of the oil and gas industry, and your thoughts about that?
Yeah, so we're getting a little bit into my previous career as an energy analyst, and I have to be careful not to reflexively go too far into that direction. But look, I mean,
it's a big stress on the sector going forward.
Yeah, yes.
About CapEx investment, these companies are critical.
Yeah, of course. I think what obviously COVID has had a huge impact on investor appetite in the sector, just like it's impacted other sectors, that are, most vulnerable to the impacts on global decline. Global retractions. And so you already had that, but you're right. There was a trend going down even before COVID, and I think a lot of this has to do with shareholder appetite for what is perceived as growth sectors, and obviously the tech sector is very hot. Some might argue overheated, but I think we have to keep reminding ourselves that number one, all of the tech sector and all of its products require a great deal of energy, and so there's always going to be a need for energy, and hydrocarbons are going to be a very dominant source of the energy mix, going forward. So I think if you look at fundamentals, I think which I think are underappreciated. I think the energy sector is still a quite promising sector. But I think the other thing you've hinted at is sort of this whole idea of energy transitions and the preference for a sustainable future, and the idea that current energy companies may not be, at least as they exist today, may not be, this may not be their future. I actually think that these companies are in the energy business, and so whatever the energy.
When you look at recently the restructuring of BP, they've been very, very aggressive in their kind of move from an oil and gas business to an energy business. and their equity share price, even though their profit has declined in recent quarters, they've actually been rewarded on the markets with a higher share price.
Yeah, and I think you'll see a lot of the a lot of these portfolio managers and traders are younger and more interested in these types of issues, and I think we're seeing a preference in this regard. I think show up, and it's something that we need to pay attention to. I do think that ESG investing and criteria and transparency can play a big role in kind of a resurgent look at the energy sector. And this is another area I think the IEF will get involved in, at least during my secretariat. And it's an important topic. It's already a very important topic, but I think it could be even more improved, and there could be greater dialogue about it, because I do see it as a key ingredient in this trend lower in the energy space, in the investor community.
As the publicly traded majors, if you like, in the oil and gas industry, whether it be upstream or downstream, and all of the critical activity they do, combined with the other point you mentioned, the reduction in capex, moving forward, it seems to me it's going to put at least from the point of view of oil and gas, it's going to put a much greater demand and opportunity perhaps on the national energy companies, the Aramcos, the ADNOCs, the Pemex, all of the big national players around the world, as the publicly traded companies lose access to capital, move more to general energy opportunities. The national players will have to, if you like, really pick up the slack.
Yeah, I mean, obviously one of the impacts of this investment crisis is really a narrative that could potentially benefit OPEC and its countries. But on the other hand, I think OPEC has been, and Saudi Arabia in particular, I think has been one of the strongest voices for greater investment in the energy sector broadly. I mean, look, they understand today that extreme high prices and extreme volatility is not good for the global economy. It's not good for their customers and their business. And so I think they're very, very conscious of that. And I think, this investment, this concern about investment in the sector, I think is shared by OPEC, even though they could be the beneficiary of it. And I think you will see, a slower return here in non-OPEC production and U.S. shale as a result of the uncertainty, that we're in now, just in terms of investor and companies' reluctance to wrap up quickly, and then you'll also have decline rates in existing production. So that's another part of this thing that will actually even exacerbate the problem in terms of supply.
What do you think its impact will be, and what is your outlook for it in terms of the impact on energy poverty? We still live in a world today where, I don't know, billion, 2 billion, what the data points are at the moment, but they're still huge, that those who do not have access to energy or maybe have the wrong type of energy as we move into the energy transition and the climate challenge. What impact does this have, and how do you counter it?
Yeah, unfortunately, it's a huge impact. Before I left Washington, I had a virtual meeting with the World Bank on this very topic, and they're very concerned about it, and the what could be a widening divide here in terms of energy access as a result of COVID. And so I wanted to have this discussion, with them before I left Washington, because energy poverty is a key sort of priority focus for me, and will be of the IEF during the secretariat that I'm involved in. And I mean, you're right. I mean, there's the current numbers are about 1.8 billion without access to modern energy access, and then clean water is something like 2.5 billion, and 800 million people in extreme poverty And so we can't really afford for that to get those numbers to get greater. And
when
so
you think of that scale, you think there's demand for every type of energy. I remember interviewing the Indian energy minister not so long ago. Was at an IEF event in India. And he basically said, we'll take every type of energy you can supply us with because the demand is for everything.
Yeah, I mean, absolutely. I'm all for the sustainable development access goals, and I think it should be aggressively pursued. But you're right, I mean, we need to throw everything we can at this problem. I mean, just the lack of access to clean cooking. I mean, it results in deaths every year on an annual basis, and we just have to do so much more in this area. And I feel the reason why I made it one of the priorities for my secretariat is I feel it kind of gets overlooked, even though this is this huge problem. It gets overlooked because of the focus. You know, obviously there's a day-to-day focus on energy trading.
Well, the biggest killer in Africa, at least it was the last time I reviewed the data, was domestic cooking with basically burning dung and other types of poor quality fuels in domestic
carbon dioxide poisoning.
And now that Africa is becoming so central to a lot of economic growth of the world, maybe these two issues coming together now or in the future 5 years is a good timing for you.
Yeah, I mean, there's a lot that can be done too. I mean, obviously the World Bank is doing the types of things they can do, but you know, the IEF can be involved in helping to have discussions about regional integration and issues and sort of attributes that make it more comfortable for investors who ultimately are going to be needed, to step in and help solve this problem. So we'll be very active on this, and
good luck.
Thank you.
Certainly could find synergies on that in terms of the platforms that we have. Joseph, just getting into sort of wrapping up territory, we started out talking about the sort of first 6 months of this COVID challenge and how all of the G20 came together, in particular the OPEC plus countries, to help resolve this great imbalance that was in the markets. But one thing that also came in this period, strangely enough, and still will be with us for 6 months ahead and more, is the big divide between your two biggest members and the two biggest consumers in the world, China and the US. Geopolitically seem to be in a difficult place at the moment. I'm wondering what your outlook for that is, and what bearing do you think it could have on these issues that we're discussing?
Yeah, I mean, it's a big problem. I think one of the things that COVID has taught us is that the world is so interdependent. And so I think we need to do more to sort of bridge these divides. But at the same time, this China-US trade issue was driving a lot of the market sentiment pre-COVID. Now it's sort of in a back seat right now. And really all of the market sentiment is on COVID and the return of demand. I think that the US-China component will resume its focal point as one of the main drivers, if we can ever get COVID behind us. And I don't really see that changing. That we have an election coming up in the US in the fall. And I don't really see it changing dramatically, if there, whatever the result is of the election. So I think this is something, that it's going to be here for a while, and it's going to be, I think, dependent on leaders in both of those, in both countries, to really robustly try to resolve it.
It might be an opportunity for the IEF to emerge as a suitable platform that brings, you have the largest gathering of energy ministers membership in the world, more than OPEC, more than the IEA, but nonetheless, the IEF as the sort of third part of that triumvirate still seems to be in the shadows of the other two, IEA and OPEC. I'm wondering how you see that, and how you see maybe coming more to the fore for the IEF to be, an active player on a weekly, monthly basis?
Yeah, well, I mean, number one, I'm the first American to really be in this, in not only in this job, but in any, leading any of the energy agencies. And I think the board really decided they wanted to have a much more active IEF. And so I think that was one of the reasons I was selected by the board. And so, I'm part of my mandate now, and thanks to COVID, I have more time to focus on it instead of having to travel around the world, is we're going to be modernizing the IEF. And we're going to be doing it in 3 areas. One, the institution itself. There's some structural changes we need to make in terms of modernizing the IEF to be able to address today's challenges. COVID is a good example of it. Number 2, we're going to broaden the agenda. I mean, obviously, I think there's a sense that the IEF is just oil and gas, and it's really not. It has a very broad mandate, and so we will be taking advantage of that mandate and getting much more into energy transitions, this whole topic of energy poverty that we talked about, electric vehicles, smart energy, regional integration and planning. So you'll see a lot more broadening of the agenda here.
I would say to you, Joe, if I might, and suggested is so much more that you guys could do with your data.
Yes.
And bringing it out to the world in a more aggressive way on a weekly, monthly basis in terms of being a relevant data point. You've got a deep well of unique data, and we know that is the golden chalice these days. I don't know if Jody's the best word in the world for branding purposes, but nonetheless, I think somehow bringing that forward could be very useful.
Yeah, that's part of the modernizing of the institution. We will definitely be more into the data and market analysis business, if you will. I'm not sure we'll get into monthly or quarterly reports, but we will definitely be playing a role in contributing to that discussion and adding the capabilities to be able to do that. And then lastly, we'll be modernizing in terms of communications, and you'll see me doing more things like this, and through our reports and our work, I think we'll be telling our story a lot more. So I think through this modernization effort, we'll be able to turn the corner here for the IEF for the better. And it basically was a mandate given to me by the executive board, and so that's what I'm going about to get done.
Best of luck. I'd say take it and run with it, as the saying goes.
Thanks.
Joseph McMonigle, excuse me, Joe, Secretary General of IEF, thank you so much for joining us on this week's Halftime Talk. Really a pleasure to start a conversation with you rather than end one.
Great to be with you, Sean.
Okay, Joe, all the best. Take care.
Take care.